Let's start with question number 1 here. From this question, you have to prepare Saira's cash book and you have to bring the balance down. So let's try to solve this now. Okay. Saira is a trader. The following transaction took place in January 2023. So their cash book and cash book with the cash balance and bank balance are given here. And on 2nd Jan, rent received. So 2nd Jan, rent received is there. In receipt side, I'll put this value rent. That too directly deposited into the bank account. So 360 in bank account. Paid $343 to Jay by telephone transfer. So payment is made. Jan 4. Payment is to Jay. Okay. 342 to Jai by telephone transfer, having deducted 2% cash discount. Whatever the due may be, from there cash discount is deducted and payment being this one. If the cash discount being 2% means, if the due being 100, discount is 2 rupees. After this, 98 is payable. Here the payment being 343. Okay. Then what about the discount, cash discount? You can do the cross multiplication, 343 into 2 by 98. So 343 in bank. If you do the cross multiplication, okay, how much is that? 343 into 2 by 98. 7 rupees. Okay. 7 rupees. Okay. Paid cash 33 for motor expenses on this date. 7th. Motor expenses. 33 rupees. Cash payment. Cash sales 395 were paid directly to the bank. So on 13th, sales. In cash, the value being 395. So in bank, it is the 395. Directly deposited into the bank account. Paid 194 to David. Okay. On 17th, payment to David. The payment 194 by electronic transfer means it's from bank only. 194. Having deducted 3% cash discount from the amount due. Similarly here. Okay. 100 discount 3 rupees, 97 rupees is paid. The payment here being 194 and discount should be, you can do the cross multiplication and you will get 6 rupees. Received a check 388 on 28th. Bank. The check is for 388 from Ivan in full settlement of a debt of $400. So the difference between these two will be discount allowed 12 rupees. Okay. Yeah. From Ivan. Okay. I need to name Ivan here. Okay. Withdrew cash $150 from the bank for business use. So 150 will come in the bank cash column and it will be payment column in the bank. Payment in the bank column. So under bank, it will be named as cash. Under cash, it will be named as bank. The date being 28th. And paid 124 for wages on 29th. Wages. That to the payment in the form of cash only. So 124 here. Okay. Now, let's try to solve this. In case of discount allowed and discount received, it is going to be tallied. 12 and 13, and here 260, 260, you have the balance, the last date of the month, balance carried on. 103, in case of bank, 1856 after adding the initial balances, 1856, now the balance being 1169. The next month, Feb 1, balance brought down, in this case being 103 and 1169. We got this value. Now, Saira has received a business bank statement and to compare is comparing to her cash book. Complete the table by writing increase or decrease or no effect in each box to show the effect of recording the items listed which appeared only on the bank statement. So these are things appearing only in the bank statement. Bank charges, actually effect on bank balance in cash book is decreasing. Is that okay? Because it's an expenses. Credit transfer to Saira's personal bank account. So Saira's personal bank account. Amount is now recovered. If the amount is collected, then it will increase. It will increase. Check from Ivan was dishonored. Ivan check was dishonored. Okay. Ivan check in which side we have shown, in the receipt side. In dishonor, it should be posted the other side, payment side. Like so, payment will decrease the value. This will decrease the value. Right. Now, what about the impact in capital? Bank charges the expenses, then it decreases the capital. In case of any expenses or income will affect the capital. Okay, in case of any expenses and income. And here credit transfer from Saira's personal bank account will not have any. See, in this case, credit transfer from Saira's personal bank account. So Saira's personal bank account to bank is transferred. You know, it's nothing but what? Capital contribution by the owner. So definitely capital will increase. Capital will increase. Now what happens if Ivan's check dishonor? Okay. So there will not be any impact. What you have shown is now reversed. Because of that, there is no any profit or loss. If there is no any profit or loss, there will not be any impact in the capital. So no impact will be the correct one. No impact will be the correct one. No effect. Okay. No effect. So last case is no effect. Okay. Whenever there is a impact in the capital account, either in the form of increase and decrease will be incorporated, otherwise it will not so. Okay. Clear? Okay, next one is a theory. We'll move on to the next question. Question number 2A. Question number 2A. 2A is all about correction entry. Okay. See here. Prepare journal entries to correct the errors. Okay. It's a correction entry. Right. Roy is a trader. He has prepared his trial balance at 31st January 2023. The credit side totaled 152 more than the debit side. Credit side is higher. Then you will put that value in suspense account debit side. Okay. Roy later discovered the following errors. Wages 200 had been entered in the cash book but omitted from the wages account. So only in the wages account it is omitted. Now you have to rectify this one. Wages is a debit, so I debit this. But in cash it is correctly recorded, so the other side will be now named as what? Suspense account. Is that clear? Second one is credit purchase 247 from Stella had been debited to Stella's account and credited to the purchase account. Credit purchases, the correct entry being purchases and Stella. This is the correct one. 247 debit and 247 credit is correct one. But debited to Stella account and credited to the purchase account. So Stella debited and purchases credited. Now complete reversal. So to reverse this, you have to double this value, right? Double this value. Is that clear? Then the entry for this being correction entry for this being purchases account debit and Stella account. Stella. Okay. The value being 494. 494. Third one being the rent payable account and sales account had both been overcast by 100. Rent payable account also overcast by 100 and sales account also overcast by 100. Now you have to adjust this. Okay, rent payable account and sales account overcast. Rent payable is a debit, so you have to cancel this by crediting. Sales account is credit, so it should also be cancelled by debiting. So sales is debited and rent is credited. The value being 100. The value being 100. Third one. Fourth one. A check for motor expenses 75 had been debited twice to the motor expenses account. So twice. Now usually motor expenses is debit. To cancel that I have to credit this. Motor expenses credit and in debit side I have to name this being suspense account. Fifth one. A payment to Jesper 196 had been recorded as 169. So Jesper is actually debited, right? But we have debited lesser. You have to debit further the difference 27. So the entry being Jesper debit and suspense credit. The value being 27. The value being 27. Is that clear? Now we have to prepare suspense account for the same suspense account. Okay. For the illustration, I am going to prepare suspense account here. Initially, we have 152 in the debit side. Last date. Okay. 2023 Jan 31. Balance brought down being or difference in trial balance. That's how you can name it. Difference in trial balance 152. Here is suspense in credit side. So I post that value in the credit side 2023 Jan 31 wages value being 200. Again here also in the debit side motor expenses 75. Credit side Jesper value being 27. If I total this, the value being 227. 227. It got closed. Next one is all about original draft profit before correcting the errors was this much. You have to find out the correct profit after the rectification, after the correction. Right. 9,800. Wages will decrease the value. Error 1 decreases the value 200 rupees minus, and purchases error 2 also decreases to this extent 494. Sales in debit side, okay, and rent in credit side, both are nominal account, both are income and expenses, so this will decrease, this will increase, so will have no impact. And here motor expenses credit side, so error number 4, credit increases, right? So it will be income 75. So you have to subtract these two and add this one, so the ultimate value here being 9181. 9181. Is that clear? Apart from that, Roy's trial balance was used to check the arithmetical accuracy of the ledger accounts. His journal was used to correct the errors found. Okay. Now state one other use of the trial balance. What is the use of trial balance? So it's to verify whether the statements is also correct or not, and we'll use this trial balance for preparation of financial statement. One other use of the journal, you can list all the journals here, and you can write only one, that's more than enough. So we have a list of journals here. List of use of the journals, right? Now, question number 3. Question number 3. Lucas is a trader. He has provided the following information. Prepared sales ledger control account as well as purchase ledger control account both. Sales ledger control account is similar to trade receivable, and purchase ledger is similar to trade payables in total. So the year beginning being 2023, Jan 1st, and here 2023, Jan 1st. Jan 1st. Here also 2023, Jan 1st. Jan 1st. As it is being trade receivables, like you know, then the opening balance should be in the debit side. Balance brought down. Here balance carried on. It is trade payables, like, so balance brought down should be in the credit side, and balance carried on here. This is a general balance. Not only that, we sometimes we have the other balance also, debit and credit. Okay, trade receivables will have the debit balance, and trade payables, the purchase ledger, will have the credit balances in general. The other side balance also be possible. Let's see, in sales ledger control account, 14,940 debit, 14,940 debit in the beginning. I can parallelly prepare the purchase ledger control account also. Here 8,450 credit. Credit sales amount recoverable from the debtors increasing will be posted here. Otherwise, the other side here, credit sales 12,736. Cash sales will not come, and credit purchase will come here 7,325 purchases. Returns to credit supplier. Okay. purchase return, it should be the other side here. Returns 463, returns 463, and returns from credit customers, sales return. Okay, here returns, sales return. This is purchase return. This value being 920. Cash received from credit customers. As we recover the amount from them, the balance will decrease. So cash. This value being 685. Bank transfers received from credit customers. We recovered this amount from bank. Okay, directly it is recorded in our bank, 10,620. Bank payments to credit suppliers, we made the payment to them. So bank 6675. Irrecoverable debt written off. So irrecoverable debt written off. This value being 140. Discount received. Discount received is a revenue for us. Okay. Should be posted here. Discount received. The value being 210. Okay. It should be posted here. Okay. Discount received. Right. Contra entries. Contra entries is nothing but amount recoverable from trade receivables decreasing, amount payable to the trade receivables also be decreasing, both parallel. This will be called as contra. Contra. Interest charged on overdue purchases ledger account. So we recovered over 166 rupees excess. Okay, we have to pay. Okay, we have to pay. So automatically the amount payable to the trade payables is increasing due to the late payment. For that they demanded interest. Now I can tally this. 27,676, 27,676. The balance carried on being 15,131 and rewrite here as balance 15,131. Okay. Balance brought down Feb 1. Feb 1. On tallying this 15,941, 15,941, and here 8,413. 8,413. Feb 1. Feb 1 balance brought down. Okay, we got this one. Rest of the two subdivisions are related to the same one. Theory, you have to give the answers, and this one and this one. Okay. Question number 4. So complete the following table, especially we have to find out the gross margins and all. So gross margin, here gross profit divided by sales into 100. Into 100. Gross profit being a revenue should be in the denominator. Okay. And in numerator, cost of sales should be there. Revenue value being, numerator, revenue minus cost of sales. Revenue minus cost of sales. In numerator, 98,000. In denominator, in numerator, 98,000 minus cost being inventory. Okay. Here is a term called inventory quantity and valuation on 31st December, October 22 are double those of this period. So this is the closing inventory and opening inventory should be half of that, 3,750. Today's inventory is double of the inventory exist in the year beginning. Opening inventory 3,750 plus purchases 62,305. If there is any carriage in will be addable, but we don't have. And from there you have to subtract closing inventory 7,500. This should be subtracted, and this will be cost of sales and this will be subtracted from the revenue. Yes, I think this value is 58,555 and your revenue being 98,000. If I subtract this cost of sales from the revenue, then GP, gross profit, being 39,445. Okay, 39,445 into 100, then the ultimate value here being 40.25 percentage up to 2 decimals. Profit margin, if we have the other income or other expenses, should also be adjusted. So here other income 4,630 will be addable. This is gross profit. This is other income, and you have to subtract the other expenses. Our expenses is subtracted. 31,188 is subtracted. Then you will get the profit for the year. Profit for the year here being 12,887. Here profit for the year divided by revenue being 98,000 into 100. Okay. Other income should be addable and expenses should be subtracted into 100. This value being 13.15 percentage. Okay. 39,445, 4,630 is added, 31,188 is subtracted. Now, rate of inventory turnover. In case of inventory turnover, you have to consider the cost of sales in the numerator divided by average inventory in denominator. Cost of sales already we calculated, which is 58,555 divided by average inventory, opening plus closing by 2. You have to add these two and divide this by 2. Then this value being 5625. 5625. Usually turnover will be, rate of inventory turnover will be in terms of times, 10.41 times. In case of liquid acid test, we'll remove the inventory. We have to take the trade receivables in the denominator, the numerator, current assets minus stock, inventory. In denominator, you have to consider the current liabilities. So you remove this, means you have to take only trade receivables, which is 9,240. In denominator, current liabilities. Trade payables and bank overdraft both will be considered as current liabilities. This is 10,500. In denominator, this 10,500. Then the ultimate value being 0.88 is to 1. 0.88 is to 1. Here, the rest of the other things are being the theory. Okay, see here. Gross margin, profit margin, rate of inventory turnover. This was the information or ratios we calculated in the previous year. In the current year, the gross profit being 40.25. What does it mean? It's a weaker, it's a positive. Rate of inventory turnover, earlier 12 times, now it is only 10.41. If the rate of turnover is lower, then it's not good at all. Okay, so position is weaker, not advisable. If the rate of turnover is higher, then it is better. Okay, increasing rate of turnover will be, inventory turnover will be advisable here. So we now feel it's not comfortable. Liquid ratio earlier 1.15, now it is 0.88. Also the position is very weaker, not advisable. Only gross margin is better, the others are not favorable. Now you have to give your comment why it is so and all to get the solution for this issue. Is that clear? Now let's move on to the next question, question number 5A. In question number 5A, Samir and Punita are in partnership. The partnership agreement provides the following: interest on drawings 5%. Okay, so you have to prepare the appropriation account. Interest on capital 3%. And Punita gets salary 11,000. And Samir and Punita share their profits and losses, ultimate profits and losses, in the ratio of 60:40. This is the information. From there, you have to prepare appropriation account. Appropriation account. Okay. So I'm going to prepare the appropriation account from this, carrying 6 marks. Apart from that, you supposed to answer or prepare current account of Punita only. Okay. Punita's current account. Let's try to solve this. Now, what about the profit for the year? Profit for the year. Okay. 24,600. 24,600 is the profit for the year. I start from here. Profit for the year. $24,600. And you have to add interest on drawings. Interest on drawings. These two. For Samir and Punita, 16,000 and on that 5%. 12,400 on that 5%. 800 and 620. Overall interest on drawings being 1,420. If I add, then this value being 26,020 less interest on capital. Interest on capital. Interest on capital will be calculated only on capital account, not on current account. For Samir and Punita, their capital being 80 and 75,000. On that, you have to calculate 3%. 2,400 and 2,250. 4,650. Punita is eligible for salary. Salary to Punita. Salary to Punita. This value being 11,000. If I add this, then the total appropriation amount being 16,650. After this appropriation, leftover profit is shared among the other partners. Share of profit. Share of profit for Samir and Punita. For Samir, it's 60% of 10,370. Punita, 40% of this amount. 6,222, 4,148. Then overall value being 10,370 shared. Now you have to prepare Punita's current account. Punita's current account has a balance of 8,335 in her current account credit side. So 2022 Jan 1 balance brought down. Apart from that, the items to be added here being this one: interest on drawings and drawings. 2022 year end December 31st. You are going to prepare all these things at the year end, right? And drawings of Punita being 12,400. After that, you incorporate from the appropriation account. This one, interest on drawings. Interest on drawings for Punita 620. And then interest on capital December 31. For Punita 2,250. And profit share 4,148. Apart from that, salary is also there. Salary to Punita 11,000. Now finish up tallying this to find out the balance, if any. 25,733 25,733. Here the balance carried on being 12,713. Balance brought down here being 12,713. This will be 2023 Jan 1. Hope we will be now able to understand this one. Apart from that, one more subdivision is here. Please tick. Samir would now like to pay expenses of his own private car from the partnership bank account. From partnership bank account means it's a drawings. Okay. Please tick the appropriate boxes below to show the effect of Samir paying the expenses of his own private car. Partnership profit for the year will have no impact because it is his own personal drawings. It affects only his own capital, not any profit or loss of that firm. Samir's drawings increases, Samir's interest on drawings also be increasing. As the drawings is increasing, interest will be also calculated on the increased value. So that will also be increasing. Clear? So the other one being only theory, you can give your views about this theory, right?